Hey there! Have you ever wondered how do traders and investors research stocks using charts? Do you feel that it's too challenging and very technical for you as a beginner? Are you overwhelmed with the crazy amount of information on stock charts that you don't know where to begin? Have you ever dreamed to make money by trading online but you can't figure out on your own? Do you need help? Do you need guidance from an expert and experienced trader? Now, imagine this. When you discovered an interesting stock, you can quickly access and study the price movements of the charts like a professional. You can make conclusions and give opinions on the health of the stock seamlessly. Imagine at the snap of your finger, you can diagnose every single stock, ETF, market indices without breaking a sweat. What if you can sift through all the information or noises in the stock chart in a systematic way without stressing yourself? Wouldn't that be great? And look this way. What if you can make money easily because you have all the basic fundamentals of chart reading at the tip of your finger? Will you be excited to know that help is here for you? Like right now? Let's continue. Welcome, my name is Rafael Kanslita. By reading this, I suppose you're looking for ways to improve your trading skills and techniques. More importantly, you're looking to achieve financial freedom from your trades. Great news! You hit the jackpot! This is where you want to be because you'll be learning from me who has a profitable trading system that beats S&P 500 and Nasdaq year after year. So keep watching. Do you know my interest in trading began as far back as my childhood began when I was watching my parents dabble in stocks and got fascinated by the colorful numbers on the screen. I decided to learn to fuel my passion further and started reading books and speaking with friends. I read up desperately on books from Robert Kiyosaki and I thought I'd be able to begin trading like a professional. You see, I was wrong. I lost all my savings while trading. For your info, the thing no one tells you about self-help book is that the information may work but not necessarily for you. So, in order to figure out what truly went wrong in my case, I compiled a list of reasons for my failed trades. And based on that, I started to work on a trading methodology system for the next 5 years. As I found out, the journey wasn't pretty. I was going around in circles, not getting anywhere with my methodology. However, I didn't give up. I studied the biographies and techniques of great traders. After 4 years of hustling intensely, I now have a trading system that outprofits even S&P 500 and Nasdaq annually. Thank God! The hard work and persistence paid off bountifully. I was able to be disciplined and reactive in my trading. I was making single, then double, then triple digit profits over time. Now, a triple digit profit is such a common thing for me. Boy, you are so lucky. In the next 4 segment, I shall share with you 3 secret things to begin to make money in stock market. Psst, here's a hint. In order to be a great money-making machine in stock market, you must start with basics. So here it is. Sorry to spoil the mood here. Before we begin, it's important that we dice the top objections raised by you. When you're beginning as an investor, the investing jungle holds the same danger for all of us. But most of the danger lies in the fact that what you don't know can hurt you. Ultimately, you have to know that there are a lot of people looking to take a piece of your wealth. For your info, many of the awesome members here brought up excellent questions with regards to stock trading. In fact, many of these questions are similar to the ones I had when I first began about a decade ago. Without further ado, let's shatter these doubts that can misguide you and, more importantly, uncover the truth that will finally set you financially free. So, for the first question, is trading risky? Everything in life, you see, comes with certain amount of risk, and it is your job to minimize it. Similar to learning how to drive for the first time, you are at risk to others. However, after 30 driving lessons with a qualified instructor to teach you, you are proficient to drive a car. This is no longer makes you a danger to others. Likewise, after learning how to trade, you know your entry, your exit, and your risk level. Your trading account is no longer a ticking time bomb. So, where does risk come from? It comes from lack of preparation and lack of knowledge. If you put in the hard work to learn how to trade just like anything else, risk can be reduced to a comfortable level. Now, for the second question, do you need MBA college degree to trade? Well, listening to all the financial mumbo jumbo on TV makes people think that they need an advanced degree in finance to know what's going on. Nothing could be further from the truth. Typically, the more financial schooling the person has, the less effective they are as a trader. Why? Because traditional financial education does not teach people how to make money through trading. It teaches them to be good employee. So, what education is required? One thing for sure, you need to learn through books, CDs, seminars, and of course, online courses. In fact, it does not require any formal college classes. Now, the next question, stock trading requires you to sit in front of your computer whole day. This is absolutely not true and it's unnecessary. It uses up too much of our true time and does not produce positive results. So why do people do it? Perhaps they feel like they should be working. The interesting thing is that stock trading does not require a lot of work. Of course, it takes time, effort, and diligence to become proficient, but the actual trading does not take a lot of time. In my own experience, usually it would take less than 1 hour. Over time, once you build a system, sitting in front of computer all day usually causes people to overtrade. This means that the more time a person spends at the computer, the more trading they tend to do. It happens because we get more bored and feel like we should do something about it. Hey, if we want to be successful traders, it's important to make our decision based on what's going to make us the most money. And that means we must refrain from using stock trading to entertain us or make us feel like we are working hard. Finally, the fourth top question here is, stock trading requires analytical intelligence? Some people think that you have to be a mathematical expert to be a successful trader. Nothing could be further from the truth. It only requires elementary school maths to understand the mathematical aspects of stock trading. The challenge is that many people who hate numbers are put off by stock charts and prices. Hey, I'm one of them. Do you know that? Finding a good introductory course to learn the basics will quickly overcome this challenge. I can assure you that. So, finally, I've already shared with you the top 4 objections and challenges faced by most of you here. So, would you like to start now? Okay, let's begin. Okay friends, in the next segment, let's check out the basics of stock charts. You will learn about the fundamental techniques in a chart. By doing so, you will definitely be better than the rest of novice traders who are still struggling to read charts. Before we begin, let me introduce to you a platform that many of the professional traders, including me, use to analyze the market. For overall user friendliness and easy reviewing, I will highly suggest that you try stockcharts.com. Okay, why? Because it is free charting website used by many traders including me, bloggers and financial enthusiasts. Stock charts offer many tools to study stock charts. You can also upgrade to a paid subscription for historical charting and further analysis. So let's dissect. Okay, this is a screenshot of a typical chart display in stockchart.com. I will be using a market index called Nasdaq Composite as an example for learning and teaching purposes. Okay, look here. Here are the 6 things you need to know about stock chart. Number 1, okay, is chart identification. Alright, so this is every chart label and tells you what exactly you are looking at. So if we look to the left of 1 here, we can see very clearly that we are looking at chart of Nasdaq Composite. Alright, the $sign COMPQ is the ticker symbol of the index, just like Google has a ticker of GOOG. Microsoft has a ticker of MSFT, and Apple you have AAPL. Okay, I hope you understand. Okay, next I'm going to show you on summary key. The first number display 4800.34, which is the last price of the index. You can view charts on daily and even weekly views. Below this we can see the blue and red lines. Okay, basically is the 50 moving average and the 200 moving average. There are price moving averages which I will share with you soon. Okay, but for now the bottom line is that the summary key tells us the important numbers from the stock charts we are using. Okay, this is a summary key. Next, we are looking at the time period. Okay, the x-axis always display the time period. Okay, this is your x-axis. If you view the dates from left to right, you will find that we are using the charts from the month of June, okay, a bit of December, and till the middle from December 2015 till the middle June 2016. Alright, next I'm going to share with you on the moving average. Okay, so for moving average, what you're looking at is about the price average over a certain period. It could be 50-day moving average like this one. Okay, which tends to be more dynamic, closer to the price action, daily price action, or the 200-day moving average here. Okay, next you have the volume. Okay, this is volume. You see here the black, red, okay, bars. Okay, this black, red bars basically means that the volume that is being traded. Okay, how much has been traded. If it's black, means usually there's more people buying, and red usually indicates that a lot of people are selling. Okay, next, this is what you call the daily trade range. Okay, what you're looking here, okay, let's take for example this line. Okay, this is the price action for the for 24th May 2016. As you can see here that the range is from this point about 4853 until about 4800.34 plus minus. Okay, so basically this signifies the price range that's been traded for that day. Okay, so what is this? How about this horizontal line here? Okay, every price action here has a line that strikes here. Basically, it means a closing price. So now, next I'm going to show you a holistic view of important part of the chart, which is price action. Over the next several minutes, you'll understand what is up, down or sideways, high and lows, support, resistance and trend lines, diagonal lines and moving averages. If we boil it down to the core, price can do one of these three things. Okay, it can go up, down or sideways. In the trading jargon, we call these different phases trends or ranges, and the direction is called bullish or bearish. Okay, let's use this picture, okay, for the sake of explanation. Okay, this is what you call range. Okay, the zigzag up down going sideways, and this one means is uptrend bullish and downtrend bearish. Okay, what is trend? Trend is basically a period when price moved mainly in one direction, either up or down. Okay, like I say again, range is a period where price moved mainly sideways. Bullish basically means prices that are rising. Okay, like this is what you call rising. And then bearish, of course, is opposite of bullish, falling prices. There is much more to it, as we will see later, but to learn how to read chart is essential to familiarize yourself with this basic. Okay, so what is up, down or sideways? The picture shows three possible but very broad scenarios. First, the price went up, or in trading terms is called uptrend. Then it moved sideways or range for a while, okay, before it went down or downtrend in short again. Take note that even when price moved sideways, there were shorter periods, okay, when price showed signs of smaller trend. Furthermore, even in the downtrend, there were periods of temporary short-lived uptrends. Okay, like this one, this one, this one, this one. And don't be surprised, even in downtrend, there is short-term rallies like this one, but usually it tends to go down, okay, because the major trend is going downwards or bearish. Okay, for high and low, the most basic thing to be taken from here is when it comes to identifying the general direction on your charts, it is through analyzing the high and lows of price. The high can be a temporary or overall price point when price went up before turning down again. On the other hand, a low is a price point when price went down before going higher again. The screenshot here shows exactly what trader mean when they talk about highs and lows. Okay, uptrend usually you have higher highs, okay, and usually downtrend you're talking about lower highs or lower lows. Continuing from the previous slide, okay, the swing lows in an uptrend will be higher. Okay, the lows gets higher, 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 as well as since the dip will be bought and usually do not replace as another dip. Okay, what I mean is that, okay, this is what the green color here portion here shows uptrend. The high will always get higher, and the low tends to also get higher. And for how about downtrend? Okay, as you can see, okay, if you follow my cursor, the lows gets lower and lower and the high gets lower and lower. So what is this? Basically, this is your sideways. There's uncertainty. One moment can be high, one moment can the highest is actually higher than the next high, but you see that it's inconsistent. All right. So if you were to pay attention, okay, try to look away. Okay, you see that this is actually a sideways motion. It's neither going up or neither going down that much. All right. So what is support, resistance, and trend line? Basically, support and resistance is among the most used concept by all sorts of traders, and even the media often picks up when a financial instrument approaches a famous support or resistance level. Okay, what you need to know: support is a price level where price forms support and went higher after reaching the support level. Okay, what about this? Two here. Okay, basically it's a price level that makes price bounce back lower after reaching it. Often you can see that a price level that was supported before acted as a resistance at a later time. Okay, what I mean is that you see, as you get higher, then he encounters a resistance line, then you tend to go lower. But if there is a lot of interest from the investors or traders, usually it tries to break away from this resistance line, and then you can follow my cursor. Okay, now let's take a look at another scenario here. When it tries to go down, however, it was actually meet some support. Okay, there's no way that it can pierce or plunges downwards, okay, because there's a support line here, okay, and around the value of 137971. Yeah, anyway, as you can see that there's a support here. There is no way that it can go lower because there's some interest from the investors. Okay, so for diagonal line, okay, in contrast to support and resistance line, trend lines are diagonal lines that also connect high or lows but slope upwards or downwards. By connecting lows in an uptrend, a trader can draw a trend line that signals the direction of the trend. Furthermore, the angle of the trend line can provide information about the strength of the trend. Channels and trend lines are another way to identify the direction of a trend, although a trader has to be aware of a few limitations and characteristics when it comes to using trend lines. Trend lines might be better suited for long-term trend and to get a very broad sense of direction, because a trader needs at least 2 points, or usually better to have 3, to draw a trend line. The image shows, okay, the first scenario again. This time we applied trend lines to the chart that help identify the direction of the market. Okay, last but not least, moving average. Moving averages are undoubtedly among the most popular tool. They are great to identify the market direction. Moving average takes the previous price information and calculate the average price out of it. The screenshot shows the price chart with 221 daily moving average here. Okay, and this 21 daily moving average, the blue line, okay, has been applied to this price action, price movement. Thus, the moving average represents the average price over the last 21 days. Okay, hold on. The angle and the direction the moving average points to can be used to identify the direction of a trend. A moving average that moves upwards will usually indicates that. The length of the moving averages, okay, basically it means the amount of periods, the past periods that it analyzes, highly impacts the way the moving average forms on your chart. If your moving average is too fast, all right, your moving average will change direction frequently. Okay, I'm talking about, let's look at this one. This is what I mean. Okay, and this one too. On the other hand, a slow moving average takes longer time to actually turn the direction. Okay, this is what I mean. Then the screenshot illustrate these points further. Okay, please take note, the black line is the faster 10 period moving average, this black line, and the blue line is the slower 21 period moving average. Okay, one moment you hear me say 50, 200, now it's 10 and 21. Okay, it really depends on the type of trader or investor that you want to be. Okay, just take note that for now, alright, you can actually set different type of moving average. Okay, the bigger the period for each moving average means you will see a longer trend. Okay, whereas if you see a small period moving average, it means that there will be more volatility, right? Usually the day traders will use that. Anyway, okay, here's a 3 bonus tips from me. The faster moving average reacts much faster to sudden changes, whereas the slow moving average runs smoother. In an established trend, a slow moving average can potentially keep you in the trend longer. Alright? However, a fast moving average signals a change in price movement faster. In sideways cases, the fast moving average change direction frequently, so fast. Okay, with that, this is the end of the first part of this value-added chart reading. Okay, I'm going to share you more soon, alright? Hey, I hope you enjoyed many valuable lessons that I shared with you so far. Let's recap what you've learned until this point. In the first segment, you've discovered the most fundamental part of chart reading, that is the anatomy of a stock chart. Using stockcharts.com, you'll learn about where to find the critical information such as price actions, etc. Following that, you are brought to understand further about price. Do you know that you can discover the health status of a market or stock through the price action? Finally, you are given a taste of up, down or sideways, high and low, support, resistance and trend line, diagonal lines and moving averages. In short, moving average is an indicator that looks like a squiggly line but provide tons of information for traders like you and me. Now, let's move on. I'm going to let you have a special preview of what sort of awesome stuff that you will learn in the next video. So here is what is in store. I will share further insights on price indicators, moving averages and chart patterns. Learn how a novice trader like you can quickly overtake more experienced traders despite knowing next to nothing about the stock market currently. How to become a profitable trader by leveraging on tools to minimize your risk and boost your chances of trading. And many more. Goodness, can you believe it that you're going to get a whole lot of free and new stuff simply by watching the next video in several days' time? I bet you are itching and eager to find out more, right? So stay tuned, everyone. Okay people, this wraps up the first part of a 3-day video series. Before you go, show me some love and hate by leaving your comments and feedbacks below. Any form of feedback, positive or negative, is totally awesome for me. This means that the video can be improved further for the benefit of future viewers. Thanks guys, and look forward to the next video. Alright, peace out.